Billions of dollars continue to chase investments in AI. Some of that money is coming from sovereign wealth funds in the Middle East who are trying to diversify from oil to artificial intelligence. Kate Rooney is here with the details. Kate?
Hey there, Kelly. So sovereign wealth funds out of the Middle East in particular are emerging as some of the biggest backers of Silicon Valley's AI darlings. And today I am told by a source that MGX, that's an AI fund out of Abu Dhabi, is set to find out if OpenAI has chosen it as one of its investors in what is becoming a very competitive round that values OpenAI at $150 billion. There's also Mubadala, which is out of the UAE. It's backed rival Anthropic, competes with OpenAI. Saudi Arabia, of course, has the PIF, plus some mega funds out of Qatar, Kuwait. All, you can see, investing in AI. These funds have increased their spending, especially if you look at Q2 of this year. It jumped to $6.5 billion. That was up fivefold from just a year earlier. That's all according to PitchBook. And these are historically oil-rich countries. They are looking to diversify their economies, and they're in a unique position to write these mega checks for what's a really capital-intensive AI industry. Only a handful of funds or big tech companies can really afford to write a check of that size. And one effect I'm hearing about here in Silicon Valley, with this endless spigot we're seeing in capital, it's really pushing up valuations. Someone described it to me as the SoftBank effect. You think of what Masa-san did with the Vision Fund. It's really known for writing checks that pushed up the valuations of WeWork, Uber, for example, to sky-high prices that turned out to be unsustainable. There are geopolitical implications as well. Anthropic is one of the startups I'm told has said no to taking money from Saudi Arabia to avoid any sort of controversy. Plus, the U.S. wants the Middle East to really be an ally in this AI arms race. It's even brokered a deal between Microsoft and G42 recently. Kelly.
Analysts on Wall Street have high hopes for NVIDIA. FactSet monitors 64 analyst ratings for the stock of the chip designer, and in that system, 51 of them give NVIDIA a buy rating, the highest possible grade, which is comparable to a strong buy on the majority of rating platforms. 4 of the previous 9 have decided for a hold, while 9 more consider NVIDIA to be an overweight opportunity. Of the 64 financial firms, none operate below that threshold. At $149 per share, which is 29% more than NVIDIA's current share price, this is the consensus price objective. In summary, analysts are utterly enamored with the stock and strongly advocate investing in it given the current state of the market. The last 2 years have seen a tremendous surge in operating momentum for NVIDIA, the business responsible for designing and producing the majority of chips in the industry, due to the excitement around the artificial intelligence, AI, explosion. Although business is booming, there appears to be a barrier for the company's stock price. Let's talk about the possible reasons for this and see if NVIDIA's stock can reach $200 before the year is over. For its long to medium-term stockholders, NVIDIA has proven to be a profitable investment, with shares rising by almost 2,450% over the previous 5 years. Because of the enormous demand for NVIDIA's data center graphics processing units, GPUs, which are used to execute and train AI algorithms, the company's second quarter revenue increased by 122% year over year to $30 billion. The business's earnings are likewise strong, with operating income reaching $18.6 million, a 174% increase from the previous year. In 2025 and beyond, the management anticipates that the introduction of new AI hardware devices built on the quicker and more effective Blackwell architecture would boost customer demand. In the quarter, the NVIDIA board also approved a staggering $50 billion worth of share repurchases, which can reduce the number of existing shares and increase investors' claim to future earnings. Even with its small $115 stock price, NVIDIA's full size is concealed after a 10-for-1 stock split in June. After Apple and Microsoft, which are valued at $3.3 trillion and $3.23 trillion, respectively, the GPU chipmaker is currently the third largest corporation in the world with a market cap of $2.84 trillion. NVIDIA's market value should reach approximately $4.9 billion after a 73% increase to $200, which would likely place it as the market leader. Furthermore, given its triple-digit earnings growth, the stock appears to have more space to run, with a forward price-to-earnings (P/E) multiple of just 41, If you want to keep up with NVIDIA's latest updates and keep up with the stock market latest news, you can subscribe to our investing tutorial channel as we post daily updates about the biggest changes and catalysts in the market. So click the subscribe button if you don't want to miss the newest market updates. Now back to today's video. NVIDIA is down today after hitting the highs of Thursday's significant market rally. The artificial intelligence giant has experienced some challenging trading in recent months, but is still up almost 200% this year, and is one of the most heavily weighted stocks in the S&P 500 index. Despite this, investors and retail investors should not jump right in and invest in a company without understanding the fundamentals. We explain the key terms that you need to know to become an informed artificial intelligence investor. The tech company creates the AI-powered processors and sells them to companies like Apple, Microsoft, Amazon, and the list goes on. NVIDIA alone is responsible for a third of the market's 2024 rise, demonstrating the extent to which AI, which is dependent on semiconductors, is driving market gains. These are the key terms you need to watch out for on company earnings calls to become a smart AI investor. One inference is A's moment of truth. Some investors view this concentration in just a few names, including NVIDIA, as risky. To gain an advantage, investors could look for other AI investment opportunities. Thus, anytime you're chatting with ChatGPT and it's producing data for you, creating a picture for you, or identifying something before creating a drawing for you, that generation is a brand new inferencing technology that's extremely complex and demands a lot of ability. When something like ChatGPT infers a response to a question based on the training and learning it has already experienced, that's an impressive and costly moment known as inference. The implication: the tech stack that powers an AI system, containing strong chips whose strength is measured in a variety of ways, including number 2 compute power, determines the system's quality. Similar to a car's horsepower, a computer's power increases with its processor, memory, and storage capacity. As a result, computation power increases and chip noise becomes audible. Executives discuss how companies can charge more for updated chips due to the increased compute power with each generation of chips. They also mention that pricing power usually increases future profit margins. The third type of chip that AI models require are graphics processing units, or GPUs. These are sophisticated and costly chips. They have sufficient power to accelerate the computations needed for artificial intelligence. This chip giant started working on graphics cards in the 90s with the goal of creating cards that could power 3D visuals for video games. Now, that same technology is applied to help large language models like ChatGPT deliver the answer to a prompt more quickly in video games. GPUs have increased AI inference performance by 1,000 times over the last 10 years, making NVIDIA a difficult company to compete with. NVIDIA owns over 80% of the GPU market. They mentioned this 19 times in their Q1 2024 earnings presentation. However, other large tech companies are also investing heavily in AI. These organizations are referred to as hyperscalers. These are large tech corporations with the capacity to dramatically expand the application of AI, such as Microsoft, Alphabet, Meta. Amazon has hinted at a number of AI-powered goods and services, including Microsoft's Copilot, Alphabet's Gemini, and Meta's Llama. Keeping an eye out for these terms on earnings calls will be crucial to staying up to date with where AI is actually being used. These large tech companies are competitors to the largest chip makers as well as consumers of AI chips. Many of these companies are still in the early stages of adopting AI. So what does this really mean for NVIDIA stock? Let's find out, but first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button, subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
iPhone, what kind of moment, Nest, what kind of moment is AI right now? Well, John, thanks for having me. Well, right now, what AI is really about is we're going to see a dramatic change in how we do many different things. It's not just we're seeing these chatbots. We're seeing about talking to chatbots and getting answers to them. But AI can do so much more and has done so much more in many of our applications for the last 10, even 15 years. At Nest, we had AI inside of our thermostat, still do, to actually change your temperature. So AI has been around a while. We just have had these, chatbots over the last 2 years. But what's more important is that you're going to see AI not just as chat, but you're going to see AI actually helping to change the applications you use to make them much more personalized for the for the features you use, as opposed to just a whole wall of tools and you have to figure out what to do. So you're going to see the applications on iPhone and other smartphones and your desktop computer start to change based on how you use them.
And we've had AI-type features in the software in these devices, as you mentioned, for years now. But it's significant to me, now there's a button. Right? Once you start building it into the interface that way, you're making a long-term bet, right? Like if you're Apple or if you're, Alphabet, Google, Amazon, et cetera, once you start putting it in a button, you're really in competition to make it simplest, easiest to use for consumers.
Absolutely. And, those buttons have existed. There was Siri before. There was Alexa. There was, the different Hello Google. Those things have been out for over, 8 years or so now, 10 years. And so now what you're going to see is a whole new level of capabilities that was always imagined, but never been able to deliver until now. And we're just about there. Obviously, Apple hasn't been shipping those features yet. They're going to, they say, sometime next year, early next year. But there is the promise. And you can see if you actually create products around AI and chatbots, you can actually do some really novel and innovative things. And those buttons are going to be very powerful.
I realize.
A day after the Federal Reserve reduced its benchmark interest rate for the first time since 2020, investors flocked to tech stocks at one of the fastest rates of the year. It was the fourth sharpest surge of 2024, as the Nasdaq jumped 2.5% on Thursday, driven by a 7.4% increase in Tesla shares and a 4% increase in NVIDIA shares. A 3% advance on February 22 was the largest gain of the year for the tech-heavy index. Tech companies typically benefit from lower interest rates because they make riskier investments more alluring due to lower borrowing costs and bond yields, in addition to the half-point decrease by the central bank. Using a dot plot, the Federal Open Market Committee projected 50 basis points more in cuts by year's end before cutting by 2 percentage points over Wednesday's announcement. The Nasdaq has been rising steadily this year thanks to NVIDIA and the excitement surrounding AI, but Thursday's surge sent the benchmark to its highest level since mid-July. After peaking at 18,647.45 on July 10, the Nasdaq closed at 18,013.98, only 3.5% below that level. NVIDIA saw a 4% increase to $117.87 on Thursday. Its processors are driving the generative AI boom in services like OpenAI's ChatGPT. After more than tripling in 2023, the shares are up over 138% for the year, although they are still 13% off their June peak. For an excessive amount of money, NVIDIA depends on a relatively small number of clients, including Microsoft, Meta, Alphabet, Amazon, Oracle, and OpenAI. These clients are either creating substantial language models, managing significant AI workloads, or doing both. Concern is raised about NVIDIA's stock whenever there is a hint of slowing demand. However, decreased rates are seen to be an additional benefit. Though it is far behind and has some doubters on Wall Street, AMD is making an effort to compete with NVIDIA in the AI space. Only roughly 6% of the stock has increased this year. Businesses have been rushing to adopt artificial intelligence, AI, technologies during the past year, which has increased revenues for NVIDIA and Broadcom, two manufacturers of semiconductor chips. Both companies offer the parts needed to integrate AI in cloud computing-oriented data centers, which are the best locations for AI to meet its demand for enormous processing capacity. Because of this, Broadcom and NVIDIA will stand to gain greatly for many years as the AI market grows from its predicted $136 billion worldwide market size in 2023 to $827 billion by 2030. For this reason, investing in the secular trend of AI is made much more advantageous by having shares in both. Which of these massive semiconductor companies, though, would be the best investment in artificial intelligence if you had to pick just one? The graphics processing unit, GPU, at the core of an AI system's capacity to carry out intricate computations, is the key to NVIDIA's success in AI. To assist businesses in utilizing AI, the company also offers an extensive suite of software along with additional services like a robotics platform. The massive semiconductor company invented the GPU in 1999 and continued to refine it over time. These days, NVIDIA chips are the industry standard for AI computing. As part of its ongoing processor evolution, the business is increasing the production of its new Blackwell GPUs this year. With more than 200 billion transistors, Blackwell is the biggest and most potent GPU in the world, according to NVIDIA. NVIDIA achieved a record $30 billion in revenue during its fiscal second quarter, which concluded on July 28. This represents a 122% increase from a year earlier because to its GPU leadership in AI. With sales expected to continue rising, the company projects fiscal Q3 revenue to reach $32.5 billion. Up from $18.1 billion in the previous year. As part of its AI plan, NVIDIA is leveraging its GPU prowess to penetrate new markets, like the automotive sector, in order to facilitate self-driving cars. Additionally, the company's CEO, Jensen Huang, thinks that existing infrastructure can enable AI systems in the cloud computing sector, which is expected to be valued at nearly $600 billion in 2023. Chipmakers like NVIDIA would have a huge market opportunity here. NVIDIA has strong financials, which increases the company's attractiveness as an investment. It made $13.5 billion in fiscal Q2 FCF. $85.2 billion in total assets were listed on its Q2 balance sheet, of which $34.8 billion was made up of cash and cash equivalents, as well as marketable securities. $27.1 billion in total liabilities, including $8.5 billion in debt.